Hey, it's Sunday the 16th. It's 11 a.m. in Thailand. Let's do the Forex markets. Let's have a look at the dollar. So the dollar in a very strong bull trend, and I suggested last week that this would continue. I did expect a strong CPI number, and I did expect the dollar to continue higher. But blimey, it was confusing over the release of the number, actually, wasn't it? So this was Thursday. Strong CPI number. Initially, the dollar soared, stock markets plunged, gold dipped as would have been expected, and then we had this crazy reversal out of nowhere. I think it was driven by the stock markets. I think even the currency was driven by a risk on stock market, by which I mean buyers just ploughed in. I don't know what the driver was. There was no particular news. It really seemed to be a case of the CPI number wasn't that far out of line, but the reaction was extreme because obviously it was the final nail in the coffin for a 75 basis point interest rate rise from the Fed at the next meeting, and probably another one to follow up pretty quickly. I mean, there's no disputing the fact that the Fed is not winning the fight against inflation. Inflation is continuing higher. People are speculating that inflation will come down. Yeah, well, maybe it will, but right now there is absolutely no indication of it whatsoever. You look at the Netherlands, it's got 14% inflation. So we have a massive global problem with inflation, and all this talk about pivot just seems ridiculous to me. But anyway, I don't know whether that was what triggered it on Friday, but maybe there's just too many shorts in the market. Thursday. Too many shorts in the market trying to cover on that inflation number, and it turned into something quite frightening where the stock market's actually jumped 5% for no reason whatsoever. It just shows that there is, a liquidity issue, I think, in the financial markets in general now. People are scared. When you're getting moves like that, it means people are scared. Liquidity is not what it was, and you're getting these crazy exaggerated moves. Anyway, so the risk-on environment on Thursday after the CPI number was released, or about an hour after it, saw stock markets absolutely soar. Gold in a very strong recovery. You know my theory on gold. With inflation going up, driving interest rates up, gold should go down. It's not an inflation hedge, and I've been right so far. There we go. Right, bearish engulfing candle. I didn't pay any attention to it. I didn't take that as a signal that the stock market, that the dollar had turned, and I didn't take the bullish engulfing candles as an indication that the stock markets had turned. So I was suggesting that you sell into a short in the stock market on that bounce on Friday morning, and I was suggesting that you buy into the dollar. So the dollar did recover as expected on Friday. Now then, weekly chart. Well, yes, the weekly chart, we were up on the week. So I'm still sticking with this trend. There is no reason for me to not do that. We are very overbought on the weekly chart. Yes, we are. We're not overbought on the daily chart. What can I show you on the short-term charts? Nothing really. I mean, it really is just trend following. Euro, volatile, choppy. I'm struggling to find reliable trade entry levels. Look at this. From nowhere, bullish engulfing candle, along with this, dollar plunging, along with this rally in the US stock markets, and then a reversal. I've got to stick with it. Oh, actually, I did have a really good level in the euro. I'm not going to show you on the 4-hour chart. Basically, 98.00 was a good level. But it was 97.90, 98.10 actually that I had as the level. This is how confusing things have got, and an indication again of how thin the liquidity is. The Aussie dollar plunged against the US dollar on release of the CPI number, as you would expect, and then a ridiculously dramatic recovery. What is that? From 61.70 to 63.16, so that's 100, I'm going to call it 140 pips recovery. Long lower wick. Now, normally you'd say, well, market oversold. Well, this is what I would normally say. Market oversold, long lower wick, pin bar, whatever you want to call it, hammer candle, decent green body, bullish engulfing because it not only that, but it's a bullish engulfing because it closed above the previous day's high, very positive, but I just didn't see it like that. I stuck to my guns, stuck to the trend, and of course we've now got this huge red candle, which I think negates Thursday's bullish and just nonsensical move in what must be just thin markets. Like the dollar is, been driven really by the US stock markets at the moment. Anyway, similar situation in the New Zealand dollar, and then the big red candle, of course, on Friday indicates that the market remains in a bear trend, but very choppy and littered with bear flags. These downtrending markets. We move down a bit, bear flag. Move down a bit, bear flag. not easy at all. And it's a struggle for me to find decent, reliable trade entry points day after day, which of course I have to do for you, my subscribers. Right, dollar yen. Now, dollar yen, very interesting. I wondered if 147.00, 147.50 would be a very strong resistance level, and really it should have been. I need to show you this on the monthly chart, but we've just sailed through it. It's just 100. We've gone from 75 in 2011, the value of the US dollar versus the Japanese yen, 75, and it's now 148. Wow. It's just crazy. Now, why did I think that we could hold around the 147.00, 147.50 area? Because it's a 38.2% fib of the entire big drop from 1985. It is the 1998 high on 2 occasions, double top high. Important levels, just sailed through it. We just absolutely sailed through it. 148.86 is where we got to. So we're straight through 147.00, 147.50. We've closed above it. Doesn't seem to be any indication that the dollar will continue to stop going up or that the yen will continue to stop sliding. A very big green candle on Friday. So if anyone else, I did recommend a short. Why not? It could easily have been a peak. I was wrong. Shorts were stopped. To risk 50 pips on that had to be worth it. But of course, now we've gone up. I don't know whether there are other stops in the market, but that big green candle, certainly a close at the high of the day, close at the high of the week, indicates that there is further strength in the dollar versus the yen. And we were in overbought territory on the daily chart, but doesn't seem to matter. The New Zealand dollar yen and the euro yen charts are just an utter mess. I really wouldn't bother touching them. The CAD yen makes more sense. We are in a bull trend. We have held the 100-day moving average just about. We did hold some good support down here at sort of 140, 104.90, 104.70, and we're pushing higher again. So, it indicates to me that the Canadian dollar will continue to push higher against the Japanese yen. And on that note, why don't we just look at the Canadian dollar versus the US dollar? And choppy as hell. Up, down, massive move on Thursday, breaking the previous high, indicating that the US dollar should continue higher against Canadian dollar, and then plunged in a bearish engulfing candle, of course, as we tracked the US stock markets. On the weekly chart, just messy. No point really in showing you that. But good recovery on Friday, obviously. So fortunately, I stuck to my guns and thought that I'm a trend follower. Good support down there at 137.00, 136.80, 100 period. You can only see this on the 4-hour chart only. Decent, half decent trend line, not that great. 23.6% fib and 100 period moving average and 50 period moving average on the 4-hour chart. That was that, and just getting oversold. That was for me a good level. But the Forex markets are actually getting harder to trade, really. Unless you've been sort of long the dollar and you've just shut your eyes, and you've been short the yen and just shut your eyes, that's really the only way to trade these at the moment. Okay, gold. Again, of course, you're hardly surprising. I'm going to say it was tricky. Oops, that's not what I want to see. That's what I want to see. Right. For me, the 1678, 1680 area is key for a number of reasons. 2021 low, 38.2% fib. That's the monthly chart, which I don't want. I want the weekly chart because that shows the 200-week moving average, the red line, which is supposed to be a factor, especially when you combine it with those important levels around 1675, 1680. But we've just been jumping around there. Okay, the upper trend line there worked as resistance. Really difficult. 1642 is also an important level. Why? Because that is the 23.6% fib from basically going all the way back to the gold rally, which started when Gordon Brown sold all of the UK's gold reserves down at $250. Well done, Gordon. So that is important as well. 1642. Let's have a look at it on the monthly chart. Is there anything around 1642? 1650 is the 50-month moving average. Okay, so we're going to have to break below 1640, which we did do last month, but we didn't hold below it. Okay, back to the weekly chart for gold. Really difficult to hold a short position, and I think you should be short gold. I do think it's going down, and of course it did. But that that blip up, well, actually, it did blip to my sell level. Hang on. Where are we? Daily chart. So this blip up to, surprising blip up to the low 1680 area. Well, you know, I had 1683, 1680, 1684, 1689 is my sell area for last week. So it certainly did hold, but I just didn't expect, after the market dropped to 1641, okay, yes, that was that big fib level. I didn't expect to see such a dramatic bounce back to 1671. So it's very volatile conditions. You've either got, if you're in a swing trade, you've either got to have a wide stop, close your eyes, don't look at the market, go away, wait for it, wait for gold to drop, stock markets to drop, dollar to rally, yen to fall. Or if not, you've got to be a scalper and be in and out. And you are getting big moves intraday, enough for you to take a good profit and just trade the levels. Okay, that's it. Hope that helps. Join me next week. Do like, share, and obviously subscribe, a notification bell, all the usual stuff that helps me. And go to my blog, daytradeideas.co.uk/blog, and that gives you, I do put some free analysis on there. It's the same stuff that I give my subscribers, and I will put that on there once or twice a week just to help you guys out and show you also what I do, because hopefully you'll go to my website and you'll go to daily analysis and signals, and you might even subscribe so that you get my trade ideas and my analysis every morning by 4 a.m. GMT. Okay, contact me if you need me. You can contact me on my Contact Us page, and you can even book a free mentor session with me for 15 minutes. That's it. See you next week, folks.